Happy Saturday and welcome to the end of week review for this week's, and this week is week 42 right here of quarter 4, the last quarter of trading year 2025. For this week, the 42, we only have 4 trading day. The Monday is the holiday, is a Columbus Day here in the U.S. Even though we see that the future market is still running, but actually it's just computer running. People don't trade much, so we didn't trade, or we didn't recording on that day. So basically, technically, it's 4 trading day for this week. We have some economics data, but it's delayed, not released, because due to the U.S. government shutdown, it's still shut down. So we are here. We just finished the week 42 right there. Next week gonna be week 43, and then the last week of October, week 44, which is where we have a huge impact news gonna happen. It's gonna happen on October 28 and 29, which is on Tuesday and Wednesday, which is very typical for FOMC meeting. And then we have no FOMC meetings on the month of November. So they don't have it and skip it, and then you go to December. So the market anticipates 2 more rate cut, which is on October and December right there. So far we have rate cut in September, so market expect another rate cut in October, another one is on December. Maybe they do more, or they do a quarter, or they can do 50 point right there. Alright, so that is in terms of the times wise. Well, so go into this week is this is the note that we have for the week. So Monday is holiday, is technically Columbus is did we spell right Columbus? Yeah, Columbus. Yes, 4 trading day. So we look in the daily time frame. We can see that the Judah swing happened at 9:30. All right. Here's some of the highlight right there. And Wednesday we see the test from below and test from above on the daily. And then when it's low time frame, the 15 minutes, which is our favorite time frame, we can see that it hit level right at 10 and 10:30, and then it reversed. Basically, it fell to break 3 times, then it's reclaimed a reverse right there. Okay, let's open the charts that we take on the screens. A good screenshot we take on Tuesday. So here's the screenshot we take on Tuesday. Here's our weekly and monthly. The monthly is on the right side and the weekly on the left side. On the weekly, you see it's beautiful right here, the range right there. You see the gap up. All right, the gap up. It takes 3 weeks for it to fill the gap. You see, right? Here's the first week, second week. The first week after the gap created. Okay, right? The gap created on this week. So it will count backward So here's our week 42, week 41 right here, week 40, with 30, and 39 and 38. So the gap create a week 38, and it took 3 weeks, 39, 40, and then the 42. Is that right? Week 42. No, actually, it's week 41. This is week 42. So basically, it takes 2 weeks between them in order to fill the gap right there. That is the phenomenon we observe, the range right there. Just look to see, right? It break through this upper range and reverse right away. And what on the setup, we see that what we see, right, is the type 2 reversal right here, right? Test from below, break and reverse. That's type 2. Oh, the type 2 normally, usually, largely, majority of them is happen on the reversal, or not on reversal, but on the retracement side, which is continuation. But in this case, it can happen. Right? 20%, 30% happen on the reversal side. We still say reversal in this 3 candle, but if you consider right here, it maybe just a retracement. We have to see if it retracement turn into a reversal. That is another story right there. But look at the setup, 3 candle that we are preaching and practicing. This is the type 2, test from below, break and reverse. Let's pull out our playbook, playbook setup. So we can review, rehearsal, rehearsal, or so the more we rehearsal or regurgitate or repeat, the better first. It's become muscle memory, so we don't have to try to remember. It's become who we are. It's become our second nature. All right, here's our playbook right here for type 2. So we can buy both type 1 and type 2 in one drawing. In the left side is the type 1, and in the right side is type 2, and in the upper is the short setup, and in the bottom and the top is the short setup, in the long is in the bottom is long setup. So you see that we see right there. Is that right? That's type 2 right here. Test from above, break and reverse. So keep in mind, we do this first leg down, and it's gonna be a retracement, and a boom, next leg down. So that's we anticipate. So largely the type 2 fall into this scenario, which is a continuation. That's the reason why we call it continuation, or the retracement end, right? It retraced. It end retracement, then it turn into a next leg down, and similar to the long setup, you're gonna have first leg up, and then you have test from above, break and reverse, so you're gonna make the next leg up. So from our observation, we need to accumulate more number to back up this setup. But right now it's mainly visualization. We use our eyeball to see it, but we need a number to back it up. So that's the whole idea. And for the type 1, it's similar, but it breaks first and then it tests. But for the type 2, it tests first and then it breaks. And then the minute it breaks, it will reverse. The type 1 is different. It breaks and then it tests from below and then reverse. It gives you a time to go in, to go along. So that's the type 2 and try 1 right there. So let's look at this. What do we see, right? That is exactly the type 2. This candle we draw right here. So basically right here, we have that level, the key level right there. So you have test from below, break and reverse. Here, that is the type 2 short setup right there. Reverse or reclaim. That 3 step right there. Test from below, break and reverse. There are a little bit different right here. We draw this candle is up close candle, but in this scenario is a down close. So that's slightly different right there. I think we may have to fix this candle to match this one, but it should not be matters as long as we see it test from below. In this case, the dark low candle likely, this is the perfect scenario right here, but here's another, it falls into the same setup, but the difference is the down close and up close. It should not be much matter, right? So that's the whole idea. Because you're not gonna have exactly 100% match, right? There are a little bit deviation, derivative from that, slightly different right there. But if we keep practicing, we will see this setup. If we keep rehearsal, keep regurgitate or repeat, then we know that when it forming, it coming. All right, so that's the beginning of Tuesday. On the weekly and monthly right there. Monthly we haven't seen the setup, but it's on manifest itself. Basically, you see that the October it did take out the high of September. Let's see if this week it's gonna be go into the low of this candle or the high, let's say it break the low, right? We want it to break the low so it can finish the down move. If it's not, then it's gonna be a inside bar right here. That means this down move is not near completion. It may make another leg down. So that's what we anticipate or have in mind. All right, look here. That's the weekly, and it manifests itself into the daily. We know that it takes 3 weeks or 2 weeks between from the week that it formed the gap until it filled the gap. And it's amazing that it filled the gap on Friday. And the Friday before the holiday. That's the reason why the Friday is huge sell-off right there. Which is the Friday before the Columbus Day on Monday. It's a huge sell-off. And it completely closed the gap. But just keep in mind, it still fall into this candle range right there. So here's the Monday, right? It's a holiday, but it's still running, right? The machine still running. And on Tuesday we saw a down move right there, and we took a screenshot as in the morning, 7:20 Eastern time, and it already branched, right? It already engulfed this candle. It's already take out a line, and the low of this Monday is supposed to be a holiday, but both of that is still in the inside bar of this huge down close candle. We want to see how it manifests itself in the 15-minute time frame. So you see the huge up right there, and there's the Monday holiday, and now it's the Tuesday. So it's open right there, and it's go up, open, and then boom, it going down. It's going up. Keep an eye on this level. This level is very key for the rest of the week. 68, 58, 75. That level right there. So that's our 15-minute time frame. Right, you see that is how it manifests itself. It's the daily. So it's open and it go above. It rate right there. It rate a high of the Monday, and then after that is go down. It rate a low of Monday. And there's a gap up right here, so it's fill the gap. All right, so what do we have in mind in this case? So it did go down and rate Friday PM, all right, and it's below the weekly open. All right, so and right here we see this is a engulfing candle, so it can go either direction when we go into the Tuesday. But the liquidity setup tell us that if we really want to go up from here, then it's a perfect setup because it's below the open for the Tuesday, and it's below the open for the week. Yes, just slightly. So there could be a loss of buy side liquidity up here. The key for us, we need to identify liquidity when we take a trade. If some reason we couldn't identify liquidity, then we should not engage. That's the key. You have to know where the liquidity goes. That's where the big move gonna take place. If you don't know where the liquidity, then you're gonna become the liquidity. But you have to go with the flow, the order flow in this case, or liquidity in this case. People, they look at the big, right? They look at the DOM, which is the bid and the offer, so they can read to see where the liquidity. But for us, we use the candle. We see where's the high and the low rest, that where the stop loss, that where liquidity. So the two way you can read the liquidity. People use the DOM, right? You go to the DOM. Let's say you go to the real chart right here. I saw people do that, right? The DOM right here. Live trading, active trading. Yes, this is the DOM. They read this, the buy and sell here, and they can decode it. But for us, is we have a different column. we feel like that one is not fit us, so we go with the charts, with the setup. Let's see. I mean, just different people, different trading style. So either way, as long as you make money, then then it's good. So we choose to go with this kind of a style of trading. So let's stick with that. Okay, so go back to all right. So here's the 15 minutes. And now let what the tapes, right? Like rewind the tapes, tape for Tuesday, and then we see. All right, we have the tape is ready and it rolling right there. So that's begin. All right, so it did rate right there. You see that it below this key level. So it closed the gap right there. And So if we want to go long, then what we're gonna do, so this level right there, what do we see? Is break. Oh yeah, and it's reclaim. So like let's say break right here, reclaim, break. So we want, if we want to go long, then you want it to be a 4 breakout. So it's a break, it's break, right? It's reclaim. Yeah, actually reclaim and break, and then reclaim. What do we see? It break, and it almost reclaim right here. So if you want it to be reclaim, break, and then boom. Then that's the one we really want to be a 4 breakout right here if we want to go long. Right, let's see how that play out. All right, we want it to be reclaim, break, and then boom. It will be a 4 breakout right here. Right, we want it to be reclaim the level and it break. That where the 4 break gonna come in. People thought that it's gonna be a neck leg down, but that exactly the moment is reclaim, it reverse. So it's gonna be that setup gonna be a type 3, which is break, reclaim, and break, and that's where the 4 break out. Yeah, we need to see. We need to look at our playbook. Right, you have another setup. We have 3 types that we're tracking right now. Type 1 and type 2, and then another one is called type 3, which is a layman term is called double top or double bottom, or similar to head and shoulder. All right, here's the type 3 that we are talking about. We simplify right there. So basically you have a first leg up, or maybe the last leg up for that matter, and then you feel it's the very first one is going to be break, and you have feather gap, right? Feather gap, and then you have a breakdown here, and then you see it's break up, right? Because it's a 4 break. Then it's reclaim, break, and right here this candle thought gonna go up because it's gonna make what? It's gonna break to the upside. That is the 4 break gonna come in. It create a false break. People gonna go and go long because they thought they're gonna make a neck leg down, but unfortunately this is the last leg up. This is gonna create a 4 break out to the upside. Basically all this, you see that? Or the higher low, it's just engineer social equivalent, boom, it flip, it go in. So that is the double top right here. You can call, actually you only need 1, 2 right there. That's called double top. In this case, triple top even better. So that's the whole idea. That the double top is for a short setup. Similarly for the long setup is here's the last down, leg down. Then you see the heel break right there, create fairly gap, and then you see right here it's gonna be reclaim, right? The heel break, by the way, it's break, and then it's reclaim, okay, and then it's break, reclaim, break. Right here it's gonna create a 4 breakout. People thought I'm gonna make what? It's gonna make the neck leg down, but that exactly where it got flip and it reverse. It's similar to this. Very similar. Because it's a short setup, it's a long setup. That's the whole idea. But you need to see the fair gap. You need to see the fair gap. Yeah, for better right here, you need the fair gap up, but it's fair gap down. Here we have fair gap down. So it's break right there. Yeah, we call it double, double bottom because 1 bottom, 2 bottom. If you don't count this one, this is the first one. So they have another name for this. They call 3 Indian or 3 top, whatever 3. it tests 3 times. If you count from the first one, it's gonna be 1, 2, 3. But if you don't count the first one, then it's gonna be double right here, double bottom. In this case, it's double top 1, 2, but in this case, it's just more than double, triple right here. But you got an idea right there. So the moment you feel like you're gonna go short right here, neck leg down, that exactly the moment it got flipped. Similar to that, the moment you thought that it's gonna break to the upside, that the moment that it got flipped and it make reversal. So that's type 3 right there. So we have three type of setup with trade: type 1, type 2, and trade 3. Type 3 is it more a little bit complicated. We try to simplify to keep it simple as possible, but it's not like simple like that's the best we can do, right? It's not simple like the type 1 and type 2. Type 1 you only need three steps right there. So just recapture, we have 3 type of setup: type 1, type 3, type 2 is much simplified, but type 3 is a little bit complicated, but it's not so complicated. So type 3 also called double top right here, or double bottom, or it can be called, it depends, right? It can be called of head and shoulder right there. If you count this in head, then you have 2 shoulder right there, or it can be head right here and you have 2 shoulder right there. It's very reliable also. The reason why it make a lot of back and forth, because it needs liquidity, and at the key moment, in this case, it can be at 9:30 or at 9:45. It's gonna flip because it needs liquidity and the time. So it combination right there. If we can patient, then we can see that most of the time this setup it happen, right? Just be patient. We look into the chart and we can see. Okay, so now go back to the tips on Tuesday. So this right there, the level, we want it to be a full breakout, which that people gonna thought it's gonna make a neck leg down, that where it gonna come in and got flip, it reverse. So let's see if it play out in the scenario that we are anticipate. Okay, let's fast forward. Why? Okay. Yeah. Fast forward. Yep. Yeah, you see that? So let's see, go back to the 9:30. What you see? That is our 9:30. You see that? Okay, so alright, so if we look here to see anywhere this can happen. Yeah, it looks scary. Okay, stop right here. So this level, we want it to be reclaim and break and reclaim, but it did not happen at an 9:30. But look, it go right, it rip more. What? It rip more sell side liquidity. So that means it gear up what? It gear up in order to reverse. But let's see if it's gonna make the neck leg down right here, or it's gonna. But if look here, you see what level right here, the London low. What do we see? You see break. Is that right? Yes, break, and then it reclaim and it break. It reclaim, break. Then when it go back to that level, a reclaim level, then it's gonna fall into a type 3 double bottom right here at this level, not at this level. We anticipate this level, but it happened at this level. Let's take screenshot right here and do analysis right here, so we are we're on the same page right here. Make sure you follow what we're trying to preaching right here. Otherwise we're preaching to the choir. So basically right here is the London low. Alright, so let's mark right there. So you mark this level, what do you see? Alright, let's not give this yeah, it is color. Is this much better? Okay, so what do we see? Alright, so that from there you see break, and you see reclaim, break, reclaim, break. So people would go here and what? Short them, because they thought it's gonna be what? It's gonna be the next leg down. That exactly the moment that it got flipped. It got flipped. So that's called double bottom right there. So bottom one, like bottom two right here, or they're gonna put another bottom right here. So you can count step one bottom right here, one bottom right here. Yeah. So it can be more than two bottoms. It's even better. But at least two bottoms should be count already. So let's go back to the red color. So what do you see? So you see that it's break the level with the feather gap right there. Break, and then you have reclaim, and then you have break, and you have reclaim, and then you have break. That's it where people are gonna go in and short them, because the top gonna be the neck like that, but that exactly gonna flip. So we want to anticipate that. Yeah, watch it in real time and do analysis, give us a good sense of how it's forming. Like you see break, double, right? You want it to be full breakout. People thought that people short them thought that it's gonna be make like that. That's exactly the moment it got flipped and it reversal. To you have reclaim. Let's see it's play out. Keep in mind our scenario that we thought that this level gonna be. We really want the 930 come up here, break to the upside, and 945 what? 945 gonna be reclaim, and then boom. At 10 it will break this level, right, or reclaim this level. Then it's gonna create double bottom at this level. But it look like that it to this London level at a double bottom right here. So and then this is a break again, the second break again, and then right here it reverse. You only need 4. Hold on, we mix identify number right here. It should be number 3 break, right? Break 1, break 2, but we count 1, 2, just switch by jump to 3, and this one is step 4. Is there are not scenarios that right here should be good enough, but just in case right here it go up, reclaim. So if right here is gonna be reclaim and it's gonna be reversed from here, then perfect, should be good enough. But it give us another one, then will be perfect. It's more than double bottom right here. So perfectly we want 3 is better. 3 you don't count the first bottom, you count the next 2 bottom, then even better. Alright. So right here, you have number 5, which is break, and that where it gonna set the bear trap. The people going and sell right here because they anticipate a not laid out. That where it gonna flip. You see that 45, 2 more minutes. It looks scary. That's exactly where you need to go along right there. When it's scary to jump, that's where you jump. That's how market's really tricky right there. It makes you like, oh, how do we gonna go long from here? We thought they're gonna be short, but that exactly, you see that? 43, 2 more minutes. You look so bleeding, right? Bleaching, right? You see that? 44, go even deeper. Yup, 44. Even, wow. See right there, 44. The last minute, and then you have 45 gonna be the next candle, 9:30 and 9:45. See that? Yeah, let's see how it closes. Who would thought that it gonna be reversed from here? Look at this, it looks so attractive to go short, but that is the moment that we need to go long. 44, let's see, can we, yes, so right here, you see that moment, that's tall right there, so it's 46. So the moment you thought that it's gonna be going down, that exactly the moment that it got flip on you. So, alright, so you remember we did mark right there, the London low, right? So let's be patient, wait. Let's be patient, wait. And you see that there's a signal right here for you. It did trade the low, which is the sell side right there. That gives you the clue that the down move is finished, it complete, and the reversal is in place. And wait for it to reach it level. You can go long and keep adding, scaling. Yep. But if you have a big risk taker, then you can go go big in here, go when it break at level. But if you want to manage risk better, then you just scale in slowly. All right, so let's continue one attack. You see that? It's explosive. Only, yeah, that's right. Let's see, 44, right? So 9 minutes. Yeah, you wait for that go up to the level, then you can start go long right there. Boom, you see that? You start go long. Oh yeah, so the 9:30 break that level, you see that? The 9:30 break that level, and then the 9:45 reverse, reclaim right away. So you know that is exactly the double bottom. You can count this bottom, and don't count this one when it becomes double bottom right there. And that's exactly we anticipate. Here's we anticipate, right? So basically the market answer our pray right there. You see that? Pray the level, and then we anticipate the step 5 gonna be reclaim. Is that right? Then it's reclaim. The mixing right here. Yeah, we should say a reclaim right here. Yeah, put a question mark. So which is the 4 breakout. The 6 gonna be reclaim, which is 4 breakout, right? You want it to be 4 breakout outside or equal into the reclaim right there. with that where we let's put reclaim right here, or it can be a 4 breakout, which is lead to be a long entry. Will be a long entry right there at this level right there. 9:30, 9:45. That's and we anticipate, and this exactly happened. See that? How beautiful it does. So let's save this. Yeah, so we anticipate right there. And we keep in mind the time, very important. If that happen not around the open at 9:30, then it's not much reliable, but it happened around at 9:30. Then you see that the 9:30 right here is like a Euro swing, you say that? Euro swing, and then the 9:30 is just reverse. So the Euro swing that ICT talking about is kind of a little bit different because it have to take out the liquidity, but in this case there's no liquidity right here. It just no external liquidity, but it's just a internal liquidity, which is a gap right here. So if you are the gap right there, you can see that if you the gap, that's where it rated liquidity right there. It's similar to ICT circle Euro swing right there at 9:30, but it's swing and then it's it reverse, so it just trap people right there. That's where the 4 breakout come in, and beautifully right there. Right now, let's roll the tab faster to see what happened. And from there, boom, 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 yeah, boom. You see that? So right here we also have, if it break here, then perfect, right? Then this one also form a 4 breakout also. Right? You see right here is first break, reclaim, all right, and then break, and that's where the double right here is gonna be reclaim. So you can target at the open right here. Is that right? Yeah, target open. Open at 18 should be good enough. We can just get out from this trade right there. Yeah, so target right there, it should be good. Because before this, we already see it sweep both end already, right? Sweep both end of the Monday. The buy side and the sell side. So when it go back to the open, then we should be a good target for to get out of the trade right there. But let's see how far it's move. Boom. Let's see. Yep. Oh wow. It go back there. Wow. It go back. It rip the sell side of liquidity. The buy side will one more time. Very interesting. Yeah, boom, wow, that's retracement right there. That's it, right? That's it for Tuesday. So Tuesday we have beautiful setup. If we can decode right here the London Dow plus with the 9:30 Euro swing and 9:45 reverse, which is create a condition for double bottom. And double bottom, or in other words 4 breakout type 3, which is break and reclaim, break, and the last break it looked like gonna break, make a neglect out. That exactly the moment that it got flipped and it trapped people who go short. The reason why we have to identify liquidity, right? So we know that liquidity is gonna go down here and then boom, it's gonna reverse from there. So that's it, the Tuesday, and now we go into, going to the Monday. All right, we go into the Tuesday. We saw the level. This is the weekly, right? You see that level? That's from below break and reverse. And let's see how this week gonna play out. So we already see the Tuesday. Now look at the in the weekly. It's not much reading right there after the move on Friday, prior weeks. So we have to look at the lower time frame to see, do we see any signal? Does the market show it hand to us? So look at the daily right here. Here's the daily. So you see that it's just early in the Wednesday. You can see the level right there, right? So the candle range theory right here is test from above, from below, and that's, you know, so the Wednesday is already break the level, right? Test from break, but also at this same time you see it tap from below and the test from above 1, 2 lit levels. It may go down that level, but how do we know that it's gonna go down or go up, right? We have to see how it opened, then we can anticipate. Here's how it looked at the end of Tuesday. All right, here's the end of Tuesday. All right, here's the end of Tuesday. Let's see the end of Tuesday right there. Push side by side. So what do you see? So you see that this level right there, right, is break that level. It's break, it reclaim, and now it tests from above. Look like kind of short for the next day, right? That's what we reading. That's what we believe in, that it may be a short setup because that level is so important that it tests from above. It may reclaim right there, but early in Wednesday, it did not go down. Right? It opened above that level. So the open tell us that maybe it's gonna go to the opposites. But just keep in mind, this candle always a engulf candle of this, and basically candle range is have a bigger range on this one. Then how do we know it can go either way, right? How do we know where it's gonna get the liquidity? It's gonna go to the buy side liquidity, which is the high, or it's gonna go to sell side liquidity, which is the low. So look at the 15 minutes can give us some clue, right? The line open the 15-minute chart at the beginning of Wednesday. Yep, so it goes there, it opened right there, you see that? And right here you can see that it create a double bottom right here. You see that the break right there, and then it's reclaim, break, and that will reclaim. So there's a double bottom right here. So how do we know if there are a double bottom forming? Then we know that it's not gonna go to go down, it's gonna go up. And if it go up, then it's gonna go to the high. Right? We already see right there. Where is that? Yeah, no, not this one. The one that we just put side by side on the daily. Yeah, so right here. So look on the Dow, the lower time frame, we can see that it's gonna go to the buy side liquidity right here, level right there, which is where is that? Not this one, but the 15 minutes. So right here. You see the double bottom, that means it goes to the upper side. And then the next move gonna be on a reverse from here or continue to go up. That's where we have to watch. And now let's rewind the tape on Wednesday and see. Alright, so we have a tips on Wednesday already. So it rate the previous day high, so it go for bicycle right here to see if gonna reverse from here or it gonna 6 more on bicycle. Boom. We still want to see what happened at 9:30. Wow. Happened so fast. Go back to the 9:30. Yeah. Okay. So the 9:30 right there. Wow. What do we see? We thought maybe it reversed from here, right? Rate the London high, rate the Friday high. Yep. So it looked maybe it reversed, but let's see. That's wow. So you going and trade straight there, you get stop out. Why it don't go down from here? That's the mystery. Maybe it did not have enough liquidity. Or oh yeah, you see that the weekly level right here? Yeah, so if you look at the weekly, it's gonna need to reach this level in order to have any chance of reverse. If that's so, it does okay. Let open it. Let's open the weekly at beginning. Okay, so you see that? That makes sense. You see that level is the key level. So if it reclaim, then it may revisit that level. So don't go short before it hits the level. That's the whole idea. Don't short right there before it hits level. So let it hit that level, and let's see. Let's see. We want to move a little bit faster. Yeah. Ooh. Yeah. So it's break the level already. The weekly level right there. Wow. Can we go and short right here? Well, we want to short when it continue to rate this, but we don't. In this case, you can have a short right here because it already hit the high time frame. So the minutes is above that level, then we can short. But if we don't look at the level, it's very hard to believe the short right here because you see that the candle is still inside bar. Right? You don't want it to be inside bar. You reach one more so we can short them. But let's see. It's not ideal for short, but that's where the source is started. See that? Yes. So we hesitate short here because you see that we wanted to rate the high of the candle before it going down, but in this case it don't need. You mark down this candle as long as close the candle after expansion, and it closed below that level and it fell to flip back, then that where you go in and short them. So that's the new lesson we learned for Wednesday right there. It make another leg down, right? It's the first leg down, retracement, and then the next leg down. Okay, so here's the lesson we learned right here. So you have the 9:30, just like that's the 9:30. Then wait for it hit the high time frame and reach another buy sell liquidity pocket around here, error, then you can short them. Right? Then you can short them. What do we see on the daily? Okay, so it go up there. We all see it go up there. Yeah, which is this level. And the weekly level. Yeah, I think, but we did mark that level. Yes, we need to mark that level right there, which is up here. Then we can see that where it's come from. Why it start at a level? Because if you look right here, you can see it. Yeah, we wonder why it's not manifest itself in here. Yeah, because we take this at the end of the day, so that's the reason. But let's continue rolling the taps and and see. Boom. Yeah. So Wednesday is a good day. You can either go long or short right there. Right, let's right here. So Wednesday is a good day. You right, you short right here, and then you can play the reversal right here also. The lesson we learned that and keep this level. The level is here. Let's go back to that level. Keep in mind that the 930 in this case is that you thought that it's gonna come down, but it flipped, and you wait for 30 minutes later, 45 minutes later, you can short them. It's different than the one that we have right here, the 930 Euro swing and the 945 reverse. But in this case, the 930 it got flipped. It looked like gonna go down, but got flipped. Then the 945 continued that trend, and then the 10 make another up close, and then from there you can short them. It's not a setup right here, but that's the logic right there. But if we want, just wait for our setup, three setup that we are in our playbooks so we can trade. We don't see it setup right here. We might, if we look at the level that we draw on the daily. So let's see. All right, so here's our screenshot we take at the end of the Wednesday. So you see that the high time frame with the daily right there, which is the level right here. We see that it touched that level. You see the fair value gap right here. It's fair value gap right there, right? It's break fair value gap, and this one is just revisit the fair value gap. Then boom, we're gonna come down. So we anticipate that means that the Thursday gonna be come down. Thursday gonna come down. So right here, we may see it does 11:15. Okay, so we don't see the setup up here, but you can see the setup right here at 11, not 11, but 13 right there. You see this level, the high time frame level breaks. That's from below reverse. That's the type 1 right there. That's the type 1 right there. So here's the type 1 that we're talking about, right? You may have not a short setup right here, but if you follow logic at 9:30 and 9:45 and the high time frame, give reason for you to short, but it not fall into our playbook. So maybe you just go with a very small size. But right here we do. Right here we have exactly the setup we want. So this break, this the level right there, high time frame, and then you have a test from below, and the time is also important. It's the PM right there, the PM section. Yeah, that's right. So we have type 1, which is a very reliable setup, and plus with the time. So basically is breaks. Remember, time type 1 and type 2 is very fast and furious. That means you want to see that candle move big that where type 1 and type 2 coming. But if the candle is just small building up, then that's where the type 3 coming. Because type 3 is basically is like a back and forth consolidation before the big move. But this one is very fast and furious. Test from below. And then that's where it's gonna reverse or reclaim. Yeah, so that's the, we term is a 4 breakout, and we term is a 4 breakout type 1 right there, and it's a, yeah, and the reversal. At what time? So it's this one break at 13, which is 1 p.m. 15, and that gonna be, it's gonna be 30. Is that right? 30. Yeah, we can go back to the charts and see where is that. Right here. So the reversal, yes, exactly 1330, which is 130. Beautiful. Yes, the reversal. Yep. So you have break real hard right there. And the second one is test from below, and then you have a reversal or reclaim in this matter. Reclaim, and it happened at a important time, the time of our intro right there. It's like 1:30, it's like 9:30 right there. That's the type 3 right there. I mean type 1 reversal for Wednesday. Yeah, so we may miss the trade right here, but you can see that if the 930 at this level and you still have a sell side liquidity up here, let it make that sell side liquidity rate, and then you can reverse short right here. But if you mix them, because it's not in our setup, it's not type 1 or type 2 right here, but if you can rip the liquidity move right here, then you know. Otherwise, just wait for the setup in the PM. Very clear, very high quality setup right there, which is break, test from below, and reverse. All right, now go to the Thursday. So here's the beginning of the Thursday. Look at the weekly. Okay, so here's the, we open, we check the screenshot at the beginning of Thursday. So you see on the weekly is it revisit that level. That means the upside already hit the targets. That's the key level right there, right? Test from below, break and reverse. And now this guy come back there. Then the question is gonna be continue or gonna just reach that level and then it can reverse. Then we look into the daily in order to give us some bias right there. So in the daily, you see that's this is the type 2 right here, right? Test from below, break, and anticipate a reverse from Thursday. And you see it give a beautiful setup. You see that it opened above that level, but it did test from above. That means that it can reverse. It can reverse. How do we know? Then we have to go to the low time frame to see how it manifests itself. So here's how the time frames, right? Is open below that weekly, but above that daily, it did come down and now we go above that level. So we don't know for now, but if we can short them, but where are we going to short them? We can scale in right now or wait for 90. Let's wait for 90. Let's watch the tips. So here, if we pay attention to the weekly level, we can see that it breaks that with a huge follow up right there. So wait for this 930 above that level, then we can short them. And by the way, we don't need it to go up here to do the buy sell liquidity rate. We don't need. Yeah, right. Yeah, we don't need. And also, if you look here, we can see maybe right here it's gonna be a double. Can be a double bottom. No, double top right here. Right. You have break to the outside, and now let's see. You see break right there. Reclaim, break. Right, break right here. It looked like gonna be break out to the outside, to the upside. That exactly where it flipped. Then it create a full breakout right there. Yeah, we can see that. So let's see. Let fast forward the tips and to see if that's the case. All right, why is it not moving? Okay. So let's see what happened at 9:30. All right. So 9:30 we say is go down here. We love to go up here and then boom, reverse. But why go down here at the 9:30? And wow, it create right here. Yeah, exactly right here, huh? Yeah, right. It just break and then it's reclaimed, and it tell you that it's gonna come down, and that is exactly anti-base. So look at the weekly level. You see that's break, reclaim, break, and that's where you thought that it's gonna be a neck leg up. That where it gonna for breakout and reclaim or reversal from here. So we can short from here. Alright, let's follow that so we can short right there. Let's see. So 9:30, I short from there. Yes. Let's see. Is it correct? No. Wow. Yeah. That's right. So you thought it's gonna be a double. Yeah. Even better, right? Yes, that's right. That's the double right there. You see that? So we can short from here. So look right here. Okay. Look. Actually, it's exactly what we want right here. Just pause right here. Keep this level. What do you see? Let's take screenshot right here. We analyze them. Actually, it played exactly what we anticipate, but we we're a little bit confused. But now we can see that exactly, just step by step. Step by step, you're gonna see this. This is a fair value up down right there. And then after the vertical, you're gonna see the first break to the upside, and then you see the reclaim right away, and then you see the break to the upside again, and yeah, you see that it closed below that level. So that's the reclaim, and that's here the break right there, right? You thought that it's gonna break, but that is exactly the moment that you thought it's gonna break, it's gonna make a neck leg up right here. That's exactly where it got flipped. and it got flipped at the 9:45. See and that is exactly the double bottom right there. You have a first bottom right here, and then you have two bottom after double bottom. Exactly our playbook play out, and exactly at the time that we anticipate 9:30, around 9:30, 9:45. Yeah, it's very confused right there, but if we look carefully, we can see. And we can see. Great. Yeah, so the type 3 is very hard to identify. It's because it has many steps. Type 1 and type 2 is so much easy. But type 3 take a little practice, a little bit patient. Reclaim or reverse. Reclaim or reverse. And then you have break. Right, you have break, and then you have that reclaim again, number 4 reclaim. Okay, and then right here you have a break again, number 6. Oh yeah, so beautiful. Number 6 right there. Is that right? 1 break, 3 break, and 5. You need the number 5, and here's the number 6 right here. Number 6 it look like gonna be breakout, right? Breakout. In this case, that means the leg up, but exactly it flipped to a 4 breakout, which is we're gonna entry short right there. 9:45. And that's the time. Critical time also. 45. Yep. Okay. This is our step 5 right here, which is after you climb, it break again. It break again. So that's the reason why they call double bottom right here, double top in this case. And here's we have fabric gap down at the key level right there. In this case is the weekly level. Is that right? So how do we know that in the weekly level when it revisit the level, then it's gonna reverse? Then this is how you look on the low time frame, in this case 50 minutes, you're gonna see a double top pattern, and it happened at a 9:30 or the 9:45 right there. So it set the trap, boom, it go and it rip all this high low, which is the buy side liquidity right there. So the type 3 happen when it need time to trap or entry liquidity right there. In this case, is the sell side liquidity. Yeah, and this one we call is a that put right here. It's a 4 breakout. Type 3, a little bit hard, but it's a double top pattern in this case, and it's a double top up or double top pattern, and it's reversal at 09:45. That's so basically a break, reclaim, break, reclaim. Reclaim, you break, you receive reclaim, and the 5, which is where the last break right here, right here to the upside. You thought that it's gonna be follow through, it's gonna be fall breakout. That's exactly the moment the number 6 is got flip. Flip, right, from breakout to fall breakout. Yeah, breakout in this case, that means gonna make a neck leg up, but that's where it got flipped. You see the first leg up right here, and then retracement right here, consolidation, and boom, we thought it gonna make leg up, but exactly the moment it flipped on us. That's the beauty right there. So it got flips, which is flip from breakout, neck leg up into fall breakout, which is that's where we have a short entry right there. Thus it's a double top right there. All right, let's save this one. All right, we just save this. We add the step 5 right there, right? So it's break again at that level, and then the step 6 we thought it's gonna be breakout right there, which is neck leg up, but that's exactly the moment it got flipped. So let's go back to the tip to see at 45, right? So yeah, 45 right there. What the minutes that boom, it flipped very fast into 2 minutes. So as soon as it go back to that level, it reclaim, then we can anti-short right there. It looks scary to short up there, but the minute you see flip, it break that level, then you can short them. Okay, let's boom. Wow. Yeah, that's the beauty. So what happened, right? We thought that it gonna be follow through. Exactly, it break the level, but it did not follow through. Wow, very interesting, huh? It caught surprise. Let's see. Boom. Now let's see what we have. Now let's see. If we go back to that level, then for sure. Oh, that even better. It's even better. It's even better. Wow. Okay, so now you have even better. It's gonna be you get trapped people right here. For some reason it go back here, it break one more time, and then boom, it tests from above, and then it reverse. So basically we entered right here early. For some reason the market decided to do one more break and then reclaim. So basically, yeah, it make another top right here. So we go right here, the top right here a little bit too early. You want 3 of them. Do we see? Yeah, we count the one right here, right, like open it. That's the beauty of the markets. You see right here, it look like a top, and you have 2 of them right there, but it will make one more even better. So if we get stop out right here, then we still the short setup still there. So that's not our trouble right there, because you still have the setup, right? Let pause right here and see. So go back to our original anticipate, but in this case it make one more loop, right? It break again right here, it go down and reclaim, it break one more, and then it reclaim. That's even better. Yep, that's the lesson we learned. And even better that this guy rate the high, which is the buy sell grid right there. Yep, that's even better. So the source setup still there. Okay, let's take this screenshot. right here. So the double top and double top is still there, even better. So now you have 1, 2, 3, 1, 2, 3, 4, even better. So if you don't count the first one, then instead of double top, you have triple top, which is even better. Even better. Let's mark this one. So basically, this is the first break up after the feather gap down right there, and then you have a reclaim, and then you break. All right, you have break it upside and reclaim happen. Yeah, actually, does this count reclaim? Yeah, it not look like look reclaim, but the reclaim happen right here. That's the reason why we need to wait for the reclaim right there. Let's go to the chart exactly to see if that counted a reclaim. Where our 15 minutes. Okay, so right here. All right, so right here, yeah, this one is not a reclaim, yes, because let's see what the close. Oh, so the close is 3150, and what's its split level? Yeah, exactly. Yeah, so either way you can count is reclaim or not, because it's closed exactly at that level. How about this guy? It's open exact level. Yes, open exact level. So for sure we err on the side of precaution, then we don't count it at a reclaim that had to wait for a year. That's why this one needs to go back right there. No wonder we say, why is that? Because if it close just above that, then it's not quite break that. So it's not breaking it. So we have to caution right here. We count this one as a break because we don't go look in the detail. But when we look in the detail, we see that this one, the down close candle, it closed exact at that level, so don't count it at a reclaim, yes. The same to this guy. This guy is open. No, this guy is break, but this one is not reclaimed that, so you can count either way. But if this one is not sure, then wait for another break and reclaim, which is that happened in this case. Yeah, wait for another break. This one is not real reclaim. That's what we try to say. Right? You have a break and the reclaim. You want to reclaim completely close below that, but this case is not completely close, and wait for the one close, and then you wait for the last break up here, and that where the fall breakdown. Actually, you want this guy to be reclaimed right away, but for some reason it do one more loop and boom. However, oh yeah, if you look this level, right, you can see that it's more clear than this level on the weekly level. The level you can see the feather gap also, right, and you see the break right here and reclaim, break, reclaim, and then the break, and last one is gonna be flip right there. Either way, both levels still have the same concept right there. So let's go here. Yeah, so maybe you not count this one is break yet, but yeah, but you can count this one is the break, and this one is really the climb, right? And then now you see this one is break, and you thought that it's gonna be neck leg up that way, it got flipped. That's where I got flip. Alright, so we just rewrite it so you can see exactly 6 steps right there. So this is the first break right here, and by the way, you have a fellow gap down right there. Yeah, that put it in there. So we add right there is the fellow gap down break at the key level right there, and you can see that the market, the price is move around a level in order to engineer. In this case, it want to go down, so engineer the sell side liquidity, and the moment we thought it gonna break and make the next leg up, which is the first leg up right there, that's the moment that it got flipped, and it flipped around the fair value gap right there. So we can go early right here, entry there, but it stopped it out. But keep in mind, stop it out right here is to short setup, is to qualify, is to validate right there. That's very hard for a novice trader. I think we get trapped this so many times. We thought, wow, it's gonna come down, and then all of a sudden it flip out of, or we thought, oh, we're gonna break out. That exactly. So for the novice trader, we get stopped out around here and get a confusion. But if we step down a little bit, we can see that's exactly what had happened. Early we count this at a reclaim, is that right? But it did not, because it looked detailed. This one's to close exact level. So caution on the errors on the risk recall ratio, right? So we better not count that, but count right here. That's which way it go back one more, because it needs to reclaim, right? It needs to reclaim very clear than this level, right? You have to be close below that, close below that. This one is close just above that, so it does not count. It's to at above that level, break right there. Wait till it's closer, then you can count it's a reclaim, and then you wait for it close above. That's where it break, and the moment you thought it go break out to the upside with next leg up, that where you got flip. And in this case, it flip at 11:15, which is not a critical time. But in this case, if you look closer, you see the type 1 also overlap right here. Breaks, test from above, reverse, that the overlap of type 1 right there. Yes, overlap of type 1. Yeah, so the subject is also a full breakout type 1 overlap right there. Break, test from above, then reverse. So this is a double top right there. It's very much in sync with our setup right there. You see that? That pretty much right there. You have fair gap down, give you the signal that it's gonna be come down. Reverse right here. So we just fall into pretty much identical with the setup we saw on this month, October last Thursday, October 9. Is that right? No, is that today? I mean, that's the day that we review. Double top. No, yeah. The day is right into, wow, exactly 1 week ago. What's the coincidence? You see that? It's similar, but you see that level in this case is the not high time frame level, it's the low time frame level. But exactly, you see that fair gap down, and then you have the break, and then you reclaim, break, reclaim. In this case, it happened exactly at 9:30. We thought that you're gonna break out, next leg up. That's where it got flipped. Beautifully, wow, yeah, you see the flip right there. Beautifully, yes. So right here, that's the double top right there. Yeah, That's right, wait for that. And it did break the London high right here. Let's see what we have for this week. Yeah, it rated the London high twice, and this guy rated this one. But almost identical, right? This guy high time frame, but if you do the low time frame, you can see this level right there. It still work. So exactly, but the moment happened in this case at 11:15. The other one is exactly at 9:30. What you see so there is so beautiful. Exactly identical. You have fabric down, and then you have double top, or you can say triple top right there. Okay, I think that's good for Thursday, and I'll go jump to Friday. So just recap this. On last Thursday, the double top happened, and it happened at 9:30. Exactly 9:30, right? But this Thursday, the same setup, identical, but the time it happened in this case is happened, you see right there, right? It happened on this candle, which is we trade out into a 11:15, not at 9:30, but you have a almost identical. You have further gap down on the key level, and then you break, it reclaim, you break, it reclaim, and look at the break number 5, that where we thought that it's gonna be neck leg up. That's where it flip into 4 breakout. That where we need to enter short. Man, that's amazing right there. It's just so coincident, and exactly, you see that? And that step number 5 you thought is it gonna neck leg up. But for this Thursday, the setup a little bit tricky because it do one more round, it do one more loop. You see that early on we thought that it gonna be, it gonna be short from here. But if we look at the detail, we can see that should not be, should not count. Yes, so right here. So early on we count this step at a reclaim, but it not yes, right? It's just close at exact that level. So that make us to go short a little bit early. But if we look for a little bit closer, we see that the key level right there, it did not reclaim that level. So you have to wait for reclaim, which is exactly wait for this candle. Then you wait for a last break, and where the reversal gonna come in or reclaim gonna come in. So that's the huge lesson we learned. Look for detail. Okay, now go to Friday. So here's the candle, not the candle, the swing chart we take on the weekly start Friday. So we see that key level it already touches on Wednesday and Thursday also, and now it going down right there. So the weekly does not give more information because it already touched the Dow lower end, upper end right there. So we have to go to the low time frame to see where's there. So right there on Friday, wow, it rate order. All the sell sign ready. So if you want it to be continued follow through, wow, you have at the beginning of the day you want to have to be stay at that level. You don't want it to go all the way this one, yes. So it may not follow through. So that's our anticipate right there. We go to low time frame to see what is this right here. Wow, so you see that this level it already break and then it revert from there, so it will not likely it gonna follow through, make like downs. It look like it gonna rebound or reclaim from here or reverse from there. So now let's go with wide the taps to see. All right, so now we have a tap rolling right there, and keep rolling to see. So hold on. Okay, keep going. Let's see 9:30. Where it going? Ooh, so go back to 9:30. What do we see? 9:30 right there, and keep track at this level. We told you earlier that level is key also. So it's right there at that level. Okay, so it looked like it's gonna come down. Let's see, it's gonna flip from here. Boom, it did flip. So and go to 9:45 flip. And you can see that a huge candle ran right there, and you see that test from below that level. You see that? That's where you can see that that could be a bullish signal right there. So right here you see that let's go with this yellow color. So right here, see that? So it break and then it's reclaim and then it touch from below, then it what? Breaks touch from below, that the type 1 reversal, and that's mean the retracement finish, so it's gonna be make the neck leg up. That could be also. So if we want, we can go short, but I mean go long, but go with a small side. Boom. Wow. Okay, so right there you can see a double bottom right here. Keep in mind that level, the level we draw right there, right? Or if you look into your lab, you see the open 930. No, not 930, but open 18. You can see that they are the same level, and you can see that the double bottom is forming right here. Double bottom forming right here. You see that the 18, that's right, open 18 range, open range right there, and also at the high beacon, you see what? You see the double bottom right here. Alright, double bottom. Basically it break, reclaim, break. That where you thought that it's gonna be the neck laid down right here, but that's where it got flipped. In this case, you have overlap of type 1 also, so it's reliable right there. So look at here, you see that if you look here, you're gonna see fair leg up on the key level, okay? And then after that, it break and it reclaim, okay? And it break. That's where it got flipped. It is a reclaim right here. So let's do a right up right here so we can see clear. So first you look to the left, you see a fair value gap up right. If if it's gonna be go in the short setup, then you look go ferrite gap down. To keep in mind that you see that it's ferrite gap down, so this gonna be a double top. Then you short them, right? But this way is the opposite. Then you're looking for the ferrite gap up and look for the 4 breakout to the outside, which is the double bottom, which is reverse of the double top. Then you see the break, and then you see the reclaim to the upside. In this case, it only double, it don't need triple. And then you have number 3, the break. And in this case, it stopped at number 4. We don't need to go all the way to number 6. So that's our idea right there. So 4 should be enough. But if you go to, if you keep back and forth, even better, the move gonna be bigger, because it engineer more liquidity, then it's gonna be explosive when it moves out of that area. And right here, it's gonna be a reclaim right here. Or this step is a basically you thought it's gonna be the neck leg down, and it got flipped. So break out, it is a neck leg down, and that's where it flipped into a 4 breakout to the outside, which is where we need to do the long entry. That's the whole idea. Long entry right there. And keep in mind you have the overlap of 4 breakout type 1 in here. You see the type 1 right there? Breaks that from below and reverse. It's overlap on the last step right there. That the overlap or the confluence give more more animation or more reliability right there. So in this case is a 4 breakout type 3, and is a double bottom pattern right there, and is in this case a continuation or reversal. Okay, it's the first leg up right there. So it's retracement and the next leg up. So yeah, this is a we're not gonna call reversal, but we call it a continuation. Which is next leg up. Okay, let's go for that for now. Yeah, let's save it. Alright, let's rewind the test at 11:30. That where it looked like, look right there. So just right there, you thought that it's gonna break to the outside, right? That's where exactly it got flipped. It's so important to see where it's flipped. So 7-8 minutes into the 11:30, we thought that it's gonna break out to the outside. It's gonna break out to the outside. that exactly the moment that it got flipped. See right there? Yeah. Let's. Yes. So you see that? It break and then it reclaim, and that's where we thought it gonna break. It break again. You see that? It looked like break again. That exactly it got flipped. And you see the fellow gap up here. So break right here, it will call it a break, reverse break. And then it does not match. Alright, so you have to look at that is the first start right there. So this is the fellow gap up, right? And then you have the break right here, and you have a reclaim, and right here, the one you're gonna right here is the top double bottom right here. It got flipped. It got flipped. So break, and this one is reclaim and break. That where it got flipped right here, right? This got flipped at a step 4. Oh, okay, so the break right there, yeah, we put the break down here, so a little bit confused, but that's okay. That's okay. Okay, so hold on, make it more. All right, let's continue to rolling the tips and see where the market heading to. So that's where it got flipped right there. It created a double top, no, double bottom. And keep in mind it's Friday, so the move is not merged. I mean, except for last Friday's move. So it make one more retracement and then boom. So that's Friday. So let's recap. You know what happened in Friday. We have a double bottom right here, and here's we put together. All right, let's review the Friday setup one more time, and then we wrap up here. So basically, you see the huge up move right here. If you look at the daily at the beginning, you see that if it's about to going down, it will not rip the south side liquidity too early because it have to build liquidity, but it looked like it already ripped off that south side liquidity, so it may not going down. It's gonna reverse. Then how it do that in how it manifests itself in low time frame. So here a little bit tricky right here. If you follow our pattern, you can see that because this setup is cut back and forth. It's not like very clear and simplified the type 1 and type 2. That's why we name type 3 is more complicated. So if you mark the level right here at the close level of the key level also, but it's near that level in the low time frame, you can see the first is fellow gap up right there. Give a signal that it's gonna go up. But before it do that, it create a full breakout to the outside in order to trap the people who short them. So it build up the buy side liquidity in order to go up. So the first thing you see is the break, and then you see the reclaim, and then the second break right there. That where it looked like right here. So at 11:30, 7 minutes into, it looked like it's gonna be make the neck leg down right here, right? It break out to the outside, the level. That's where exactly it gonna flip. You see, it flipped right there. And if you look carefully, you can see the type 1 also overlap in here. Brake touch from the reverse. So give more powerful for the up move or more, reliable right there. And here's how it start up at the day and how it's closed at the day right there. So it's reverse. It's not gonna be follow through. Friday and not follow through with the Thursday right there. All right. We hope that you enjoy this recording and this analytic review. We're grateful for this time opportunity. We do what we love, and success is coming our way, day by day, little by little. In every way, we can better and better. Thank you, and have a great weekend. See you next week.